So in this stock, I made a mistake while managing the trade. I did not make a mistake by buying the stock. The mistake happened actually as the stock was going up. So let me explain what happened here. I have made a couple of videos on this. If you can check, this is Indus Towers. Good profit in this stock. However, while doing the trade management, I missed certain important clues here, which I want to discuss in this video. So in this video, I will not discuss why did I buy here. The yellow line is my buy point. This is when I bought the stock as it crossed the yellow line. And this red line is my 8% stop loss. So I have drawn this base here. You can see the green zone, which is the upper quarter, the blue zone, which is the second quarter, and the red zone, which is the lower half of the base. This is 0.1, 0.2, 0.3, 0.4, and 0.5 in the base. So at 0.3, I placed the order. Look what happens after I place the order. It starts to go up. There is no reason to sell here. Then it goes up and creates a rising window. Between these two candles, if you notice, there is a rising window. So the high of this candle, which is 369.20, let me draw it for you. The high of that candle, which is 369.20. Yeah. The high of this candle is the low of that rising window. And we all know from Japanese candlesticks knowledge that a rising window becomes support. So now, although my actual stop loss, which I keep in my broking platform, although my actual stop loss is here, which is 325, my real mental stop loss is this blue line, which is 369.20. What do I mean by mental stop loss? Well, mental stop loss means after this candle closes, when I keep the mental stop loss here, after this candle, if the stock closes below the blue line, I will sell all my shares. Because the fact that the window support gets broken indicates weakness in the stock. Please notice that I am not using the moving averages here. Since I got the window itself is more powerful than the moving average. Then the stock started to go up. I did not sell on this day because the volume was low, which means the institutions are not selling. I held the stock throughout this decline, throughout this correction, because the volume was low. See, there is always a tendency to sell here, but there are two main reasons why I could hold on to the stock. And if you are a real trader, you will understand what I'm saying. Number one, the volume is low, which means the institutions are not selling. That gives me confidence that the big money is still in the stock. And number two, I have a small position size in the stock. Now imagine if I put 20% of my portfolio or 10% of my portfolio here, it is very difficult psychologically to endure this correction. Okay, it is not that simple. Okay, even though the volume is low, even though the chart is telling you not to sell, but the mere fact that you have a larger position size as a proportion of your portfolio, if you have a large amount in a stock, psychologically it is very difficult to hold. But since I only had a 2.5% position, I had no reason to sell even a single share. So during this decline, I held on to the stock, and these two candles are giving you bullish confirmation. You look at the lower shadow, the lower shadow, the longer lower shadow represents bullishness. Finally, the pullback comes. Then finally, between these two candles, you see another rising window. If you notice, between the high of this candle and the low of this candle, there is a rising window. See, with windows, the tinier the window, the better it is. Okay. The larger the window, the more the risk that the stock will fluctuate within the window. Okay. So now the high of this candle, which is the low of that rising window, becomes my new mental stop loss. And this level is 398.05. So I move my mental stop loss to 398.05. See, the high of this candle becomes my new mental stop loss. So now this is called as backstopping. If you read Mark Minervini's book, think and trade like a champion. This is called as backstopping. As the stock is going up in price, you start to move your stop loss, not your real stop loss. My real stop loss is still here. Okay. But my mental stop loss is here. So if the next candle closes below that blue line, I will sell all my shares. That's the strategy here. That's the way I manage the trade. So from yellow line till this close, it was already up 15%. Okay, which is a good gain. Then it started to go up. There was no reason to sell on this candle, but I sold on this day because on that day there were four other stocks in my portfolio which were down like 3, 4, 5% each. Okay, that's a 12 to 15% loss in my portfolio. So to cover that loss, I had to sell this stock on this day. So if you're a real trader, you will understand what I'm trying to say here. There is this chart gives me no reason to sell a single share on any of the candles after I bought the stock. Not a single candle has given me a bearish signal. So there is absolutely no reason to sell the stock. But I had to sell on this day because there were other stocks in my portfolio that were not doing well and which were eating away my unrealized gain. So I decided to offset those losses with the gain that I made on this particular stock. Okay, as professional traders, we sometimes have to do that to manage our risk. Okay, to protect our capital. I did not want to dip into my realized gains to finance my losses. I wanted to use my unrealized gains to finance my losses. That is why I sold this stock, which I realized while selling. I realized that I am making a mistake because on this candle, the volume is low, which means what? The institutions are not selling. So if the institutions are not selling, why should I sell? So on that day, while selling, I knew that I was making a mistake. And see, look what happens next. The stock goes up 3%, then it continues to go up another 3%, continues to go up, right? And it ends up creating another rising window here. So imagine if I had not sold the stock here, I get another rising window. So the high of this candle, which is 429.70, that becomes my mental stop loss. 429.70. See, now this becomes my mental stop loss at the close of this candle because this candle completes the rising window. Now, this is the third rising window after I bought the stock. So the market is this stock is continuously giving me a clue, or this stock is continuously giving me signs of strength. A rising window is a sign of strength. And finally, when this candle broke that, I should have sold all my shares. So rather than selling here, I should have sold on this day just 5 minutes before the close of the candle because it was closing below that blue line, which was my mental stop loss. Okay. See, by keeping the mental stop loss and keeping my actual stop loss here, I am giving a lot of cushion for the stock to fluctuate. I could have a big spike on any given day and it would still not trigger my main stop loss. Okay. So giving cushion to a stock is important. So I wanted to discuss this trade with you because sometimes you are forced by the market to sell the stock. And sometimes you have to do that. But if you go purely by the chart tells you everything. I would say managing stocks independently is better than managing stocks collectively. In the long run, managing stocks individually based on their chart without looking at other positions is a better option going forward. But to do that, you should learn how to control your risk on other positions. If other positions are losing like 3 to 5% on the same day, then you will be forced to do this. Okay. If I had managed my other positions well, I would have held this stock rather than selling here. I would have sold here. And even here, there was no reason to sell the stock. There was no reason to sell all the shares. So if you see, this is the purple line. Okay. On this day, the stock was still above the purple line, which is the 21-day exponential moving average. So I could have sold half here. Then I could have sold another half here because it closed below the 21-day exponential moving average, right? And who knows, after this, the stock might continue to go up. So there were multiple ways to manage this trade properly. I did not manage this trade properly because I did not manage other positions properly. If I had handled other positions in my portfolio correctly, I would have maximized or optimized my gain in a stock where I had bought exactly at the right time. So, as a professional trader, please focus on your trading. Please focus on each individual stock. If the stock is not performing, be quick to cut 50% or even 75% of your position, because the best stocks, the stocks that go up like this, are the ones that never close below the yellow line while going up. There are stocks which go up, then come down, then close below yellow line, and then start to go up. Those are not real breakouts, those are fake outs. A real breakout is a stock where once it closes above the yellow line, it never comes back to the yellow line, continues to go up at least 20, 30, 40%. Okay. This is a perfect example of such kind of a stock. So although I made good profit on this stock, like 16, 17% maybe, but I could have made much more. So that's a trade management mistake. That's a uh, profit optimization mistake. Although the market is telling me what to do, I am the one who is not listening. Okay. So this is about psychology. This is about managing other positions in your portfolio as well. So if you are a real trader, you will clearly understand what I am trying to tell you here. So please manage your positions correctly. If you manage your other positions well, then you will be in a position to hold on to your profitable stocks. If other stocks are losing money, then you will be forced to sell your good stocks. Okay. So when the stock is not doing well on the breakout day, or on the 1 or 2 days after the breakout, then be quick to cut 50 to 75% of your position immediately, because chances are that the stock might not go up. Here you see good follow through, one, two, three, four good days of follow through in the stock, which is great, right? You want to see follow through in the stock when you buy. You don't want to see the stock dancing around the yellow line. That is not a true breakout. Okay. So remember what we have discussed in this video, manage your positions accordingly. And if you have any questions regarding this particular trade or any other question related to breakout trading strategy or candlesticks, just let me know in the comment section. I would be happy to answer. One point I wanted to mention here before I leave is, if you look at this stock after point two, okay, there is not a single candle which has closed in the red zone. If you observe carefully, this is point one, this is point two. See, this candle closes in the blue zone. Even this candle closes in the blue zone. So that is another reason. And the stock, the buy point came in the green zone. So the buy point coming in the green zone, majority of price action after point two coming in the blue zone, not a single candle closing in the red zone after point two. These are all positive signs. These are things that I look for in a base, which give me confidence to not only enter the trade, but also hold on to that position for a longer period of time. And the fact that you have 2 3 rising windows is a proof. It gives you confirmation that your view on this stock is correct. Now, if you notice here, I am not looking at news, I am not looking at earnings, I am not looking at balance sheet, profit and loss account. Although uh, backstage there are a lot of fundamental things happening in this stock. Some company was trying to buy this stock and things like that, but those were not the reasons, okay, for which I bought the stock. My primary reason was the chart itself. There were companies that were trying to acquire a majority stake in this company. Okay, that is probably the reason that the stock has gone up in this case. But what I am trying to tell you is, those are not my motivations to buy the stock. My motivation is purely based on the price action that I see on the chart. My motivation to sell is purely based on what is happening in my portfolio. Am I doing well with other positions in my portfolio? If not, I am selling this stock. Okay, I am not married to the stock. Okay, so let me know if you have any questions. I hope you liked the discussion. Please support this channel. I am discussing the stocks that I am into the strategies that I am using in my trading, so that it helps you. I am here to help. Okay. So let me know if you have any questions. We will discuss them. Thank you so much.